Alright, so in this video, I want to go through how to trade breakouts. I'm going to show you my chart, go step by step through all my rules for breakouts. Especially we'll talk about how to avoid fake outs, these fake breakouts that don't work, ending up losing you a lot of money. We'll go through step by step how to do it. A few key secrets here that I'm going to share with you on how to do it better. And let's go on the chart, do this step by step and kind of teach you how to trade breakouts. Okay, so here we are on USD CAD on the 1 hour chart, and we have price making a range. We have a range that's going between roughly 1.36 and 1.365. So roughly here a 50 pip range on the 1 hour chart. Now I'm going to put some lines. We have the support somewhere around here, and then we have our resistance somewhere around here. Now we'll let the price play out and see how that evolves over time. We have price bouncing of the support, coming to the resistance here, going back and forth. Not doing a lot here, but we'll wait for a breakout of this. And first I want to show you the typical way of trading breakout. Now, most people when they trade breakouts will do the same thing. They'll go and they'll wait for a break of the range, which we had right over here. That's a pretty strong break of the range, price closing outside the range, and they will start to trade. So the typical way you do it is you are entering when you have a break of the range. And people are gonna go and place a long here, down top of the range, put the stop loss somewhere below. Let's say they put it here. Then they have their target, whatever the target is after. But let's see how this plays out. Okay, price breaks the range, fails to go higher, and boom, come back inside, hit a stop loss. Now, even if you put the stop loss lower, you'll still get hit anyway, because price is not ready to break out yet. And this is the big key issue with breakout trading, the fact that you have a lot of fake breakout. From my experience, about 50% of the time you have a fake breakout. Price doesn't go in your favor, goes back and hits your stop loss. Now, if you trade breakouts the typical way, that's going to lead to many, many losses that you don't have to necessarily face. A few key rules to add some confidence to this. Even if you get a good reward to risk on these trades, it's not worth it to take all these trades that are ending up being fake breakout. You might as well just stay away or add some confidence. And it means a lot of people who get into breakout trading fail and they kind of end up changing strategies over time because they're not able to trade breakouts the right way. So here's what I'll show you is I have a quick trick, quick hack to add more confidence to my breakout trades. We'll get to this in a second. Make sure you give me a comment below. I want to hear your thoughts about this. If you like this strategy, the rules I'll share with you in a minute. Tell me if you like it. I'm curious to hear. It'd be really appreciated if you can leave your comments and your thoughts below. I would really love that. So what I do to trade breakout is I simply add one more tool for confluence. Now, that tool is pretty simple. Everyone knows it. It's the RSI. The key thing here is that I don't use the RSI like most people typically would use it. So I have a few key rules behind it. Now, most people, when they think about the RSI, they will look at if it's overbought, oversold. And when it's oversold, they want to buy. When it's overbought, they want to sell. That kind of principle. So when the RSI is above 70, like over here, they'll be looking to sell here. And when price is below 30, like it is over here, they'll be looking to buy here. Again, when price is over here, way below 30, they'll be looking to buy. Right? So they buy when it's oversold and they sell when it's overbought. Now, there's been a lot of research and tests done about this where they find out that this way of trading the RSI doesn't work. It's actually break even or even losing money sometimes. So I use it the other way, which makes a lot more sense. What this means is I'm using the RSI as a tool for momentum. So when the RSI is oversold, it's actually a good thing to get in the trend. Now, doesn't mean we'll get exactly when it's at the peak oversold. We don't want to, of course, sell when it's at the low necessarily. That's a dumb thing to do. But if it's overbought, the same principle here, we are overbought. Here we're looking to buy instead of selling. This is a place where we could look to get in the market as opposed to selling. Now, not always. We need to have the right parameters around it, which we'll get to in a second. But that's the idea behind it, right? So if you're over here, instead of buying, we'll be looking for selling. Now, we don't do this because we're in a range. There's a few things you have to add beyond that. But the idea of adding the RSI for confluence on your momentum trades can really make a big difference. So here we have a look at the RSI when we have our breakout trade, right? We enter right over here. That was our typical traded, like a typical entry. And the RSI was not doing much. It was just within the limits, meaning we don't have any momentum for breakout here. And it wouldn't be smart to go long because we have no momentum. So what we'll do is my rule for breakout is we need to have a clear break of the range. Okay, our range is over here. We have our resistance area. It should be clearly broken by candlestick, closing beyond that range. And then we need to have the RSI being with that momentum. So if we buy, being overbought. If we sell, the RSI needs to be oversold. If you understand this principle, it will take a bit of time. It's counterintuitive to what you would read in books, online, but I'm telling you it works a lot better. So let's let this play out. Okay, price is going back above. Now, by the way, if we have this change here, our high is now over here, right? We want to break the wick of the range to have a clear breakout. So I'm moving my line here a little bit above. I want to be able to break these wicks before we go in the market. Here we are barely breaking. That's a good sign. Now notice how here we clearly broke the range, right? We broke all the wicks close above our range, which was previously over here. And we have a clear break of the range. Okay, that's good. But we also have the RSI here being overbought. It's above 70. I mean, barely above, but that's so good to me. That means we have good momentum in the market to go long. Okay, so now what I'll do is I'll place my order here in the market and I'll show you how I do it with the RSI. So you see we have this bullish engulfing candle here. So what I'll do is put an order just so they close this candlestick. I'm going to go long, put my stop loss below the range ideally. I want to be able to at least have it within the range so that if price comes back within, we can get out. It makes a lot of sense. But if it's not in the range, then it doesn't really make sense to get out of the trade. If we just kind of pull back a little bit, go a little bit above the range, that's fine. But I want price to go back within the range for sure. Now, this is a typical way to trade the breakout that involves a take profit. That's the height of the range. So I've lowered this down a little bit here. And what I would do is, this is the way to do it like in theory. What they teach you in books is you will look at the height of the range, which is over here. Then they will say, okay, this could be a range that goes this much in your favor. So this much after the breakout. So you'll just copy this, add this on top. And that will be your target. Now look at how bad this gives us our reward to risk with this strategy here. We will barely have a 0.5 to 1, which isn't good enough for our trades. So I ignored this rule that you read about in books. I don't think it works that well anyway, because then if you have like a really tight range in a very big trend, you will just have like a small take profit. It doesn't make any sense. So what I do is I set my first take profit at 1 to 1. Then I have a second take profit or a second half of the trade that's going to be trailing. Because what if we have a breakout and then it goes above and starts a trend afterward? I want to be able to catch that big target. Could be like a 5 to 1. I want to be able to catch that move if it happens in my favor. Right? Then I'll be left out with just a 1 to 1 or just a 2 to 1. That move can have a very big impact on my P&L. Like especially if it's a 5 to 1 on that trend. If it doesn't work out, I'll just close it out, get out at 1 to 1 or 1.5 to 1. But if it works in my favor, I'll keep it for way longer. So let's see how this plays out. We have a stop loss in the range, very important. Take profit 1 to 1 for the first take profit, and then a trailing trade for the rest of the move if possible. Okay, price pulled back a little bit against us in the beginning. We are slowly going up, coming back down. Pretty big wick there, and we go back up. And this has been a bit of a slow move here in this case in the market, but we have momentum on our side. Keep in mind. You can see it kind of takes a bit of time here, but some trades will be faster. And price goes in our favor. Okay, see how our 1 to 1 here is achieved. Only a couple of hours later. Now this could be a multiple day trade, but that's still fun. I will keep it for whatever long it takes. I'm not a big fan of closing trades too early just because you want to get out. So you can keep this for longer. Now we have our second trade going on. And what I'll do with this is usually I have a moving average on my chart, a whole moving average, which in this case I'm going to add here quickly on the chart. We'll add this to here we are on the 1 hour chart. What I typically do is I typically have a haul that's about somewhere like around 20. 20 or 14 is kind of the sweet spot on the same time frame. So I'm going to go and add this on the 5-minute chart. So I'm going to go and add this on the 1 hour chart because that's our time frame of this trade here. And whenever this whole moving average becomes red, I'll close it out. Now I'll get out. But if it stays green for a while, I'll keep the trade running. Now you could of course adjust this if you want to be more relaxed. Could be having a 50 EMA where you keep track of price. If it goes below, you close it out. You can have some more room there. I like the kind of 20, get out, that's it, finish. It's easier for me. But you can keep it for still a long time like this. Okay, we turn red and we get out of our trade right over here. That will give us somewhere like a roughly 1 to 1 in this trade. Okay, so that's the most performing breakout here, but let's have a look at a different example on a different pair. I'm going to go and pick a pair that's trending a lot. Actually, let's go with the S&P. And we'll go back in time. Okay, here we have the price on the S&P ranging. Now this is going to be good for trend because S&P trades a lot usually. So it's a good way to get on breakouts quite easily and without too much worrying about what it will trend on us. We have a trending market. Price goes up and up and up. We have price consolidating a little bit, making a range, and then we look for the breakout after that Ideally within the trend, that would be the ideal case. I'm going to hide the all moving average here on the chart. And let's look at our breakout. So we have a range that's from here all the way to here for now. Let's see how this plays out. Okay, and we continue like this. And looks like we have a breakout here. Price bringing down the range. How's the RSI doing? It's overbought, which is a good sign. And then we'll go and place our entry just at the close. This is a much better scenario here because we have price breaking clearly. And we don't have multiple breaks. We have the RSI right away being in our favor. Those would be the best trades to look for. Stop loss to be below the candlestick at least and within the range to be able to make sure we have the odds in our favor. And then from here we target our first target at 1-to-1. That will be very quick to achieve. 1-to-1 is very fast on this move. And that's already done. Then our second one will be trailing. Again, like I said, we'll add the hot moving average on our chart here after our 1-to-1 is happening. And let's just put this here. For this example here, we're going to go and change this up to a 50. Now you see when it's trending quite heavily, that a bigger moving average is usually better because price can pull back a little bit. It will turn red, especially this one here. The hot moving average is very sort of quick for that turnaround. So I usually prefer to have a bigger time frame moving average for this kind of move. And then we'll just let this play out here, see how this goes. Okay, we are smoothing this out. Actually, we're still green here, coming back up. Okay, we're coming up above the hot moving average here. This is going well. A little bit slow, but we are slowly moving up. And looks like we are here turning red again. So our target will be able to achieve this amount, which is a 1.66 to 1. Now that's my way of doing it. Of course, your targets could be a lot more aggressive or quick, depending on what you prefer. In this case, price did go ahead even more than that. But I think prevents you here from having multiple entries. So you have maybe like a reversal one somewhere around here. So actually, we have a reversal set up for me right over here. This will be your first entry. Then you have your second one, which is a breakout. That's your second entry with a different strategy. That's the different rules like I show you here today. Then your third one will be here with the trend. You have a pullback one where you can re-enter back in the trend. So having this kind of multiple factor makes it that you have a lot more trades possible. And you can target different moves and can also benefit from all of them. So you enter here again, you enter here again, then you can read the move and make the most of it. So that's kind of how I would see it. In the end, prices ended up crashing down, so that's a good thing we got out early. But if you have any question on this, how this works out, happy to help out. If you have any comments, post them below. Make sure you let me know your thoughts. Give a like to the video if you liked it today. If you want to see more like this, I have a lot more videos on my channel with like reversal strategies, pullback strategies. I'll guide you more to how this works out. You can check out these links over here to watch this next. And I'll catch you back here in the next video pretty soon. Ciao.